Michael Burry may have lost his touch, the star of The Big Short that that whole movie is based on, and that he actually went out and did and was very successful, made a ton of money, went against the grain, and ended up being right, might actually end up being a problem for him because whenever somebody does that, they start to think that they just know better than everybody else. There's a lot of examples that you can see of that. And that's probably the worst way to go about it. Once you get something right and everyone else was against it, if you don't have yourself grounded enough to continue looking at people and saying that you're the smartest person in the entire world, then you stop learning and then you're going to be drastically wrong because you just think that you can't be. But he tweeted out one simple word, and that was sell. And he managed to tweet that at the exact time right before the S&P 500 moved up like 2.5% right after, and the NASDAQ up over 5% right after he tweeted that. It is a short time period, so it doesn't really matter. But it's just funny that he said to sell, and then right after he did that, the markets moved up. It's just kind of funny. And then what he ended up doing after that, after he was wrong, at least for the short time period, is he deleted his account. He took his Twitter account and deleted it. Now, his Twitter account is actually still there. We can see here he is. It came back, but he deleted his tweets, which is what he always does. He always deletes all of his tweets. You can see there's nothing here. He's got no media tweets, and his last like is from October. So he's always done this. This is literally his playbook: is tweet something, be wrong, delete the tweet, delete your account, and then come back with your account with no tweets and just all of a sudden think, God, everything's great, and you never said any of this. Like this says here, you see Michael Burry deleting his account every time he shorts the local bottom will never stop being funny. It's literally every time he tweets something and a few days later ends up being wrong, he completely just deletes his account and he comes back a few days later as a fresh account as if nothing happened. And even here, Elon Musk is even laughing at this. So the whole thing is pretty funny. And as we know, the Federal Reserve did end up raising rates, and they came down to 0.25%. So it was kind of what the entire market was expecting, but is obviously coming down. It's less aggressive than they've been doing. They've been doing the 0.75% raises, even the 0.5%, and now they're coming down to this. So that gives the market and people a lot of confidence to say that maybe this is slowing down, and the rate hikes, they're not going to be here for too much longer. And some of the things that the Fed said kind of makes the market think that that might be what's happening. Like this right here, saying the Federal Reserve officials believed a couple more rate hikes would likely suffice to reach a high enough interest rate at which the Fed would feel comfortable pausing the increase. And that helped send stocks higher in Wednesday trading. So that is something that people looked at and said, the Federal Reserve is slowing down. They're going to pause the rate hikes in just a few more hikes or just a few more meetings, and then the rate hikes will be done. So everyone gets excited about that, and they take that as the Fed pivot, even though it's not a pivot because them pausing rate hikes is not a pivot because the pivot would be them reducing rates. But that's what people are super excited about, and it just so happens that Michael Burry said to sell right before this meeting, and then this meeting came out and the market rallied off of what was said. And it's been a little contradicting. So that first statement was pretty good. People looked at that and said, we're almost out of the rate hikes. And this too, saying economists say that recession fears appear to be unwarranted and that if anything, there remains a risk that the Fed will have to continue its monetary tightening to prevent the economy from growing too fast again. So that obviously contradicts the first part, right? But it's also not from the Fed. So it's from economists, and economists aren't always the brightest people. They also said printing the trillions of dollars that was printed in 2020 wouldn't cause inflation. And look where we are. So who knows if they actually know what they're really talking about. They're probably just guessing, just like everybody else, because nobody can tell you exactly what's going to happen. No one can tell you where inflation is going tomorrow. No one can tell you where the stock market's going tomorrow. No one can tell you any of that. But for some reason, the economists think that they can. And another quote from a different economist at a different place said, we expect Fed Chair Powell will insist on the need to hold policy at a restrictive level for some time to bring inflation down towards the 2% target. Powell will also stress that history cautions strongly against prematurely loosening policy, which sure is, I think, true. Historically, you don't want to just loosen everything and not have inflation under control. Then it gets worse, and then you have to tighten even more in order to bring inflation down, which could cause way more problems. That's the whole idea of the soft landing that the Fed said that they're trying to do. I mean, it hasn't really been soft. I don't think a lot of people are enjoying this process, but he is obviously, the rates are probably going to be stuck at higher levels, and mortgages are going to be affected. Car loans are going to be affected. Any type of loan is going to be more expensive for a prolonged period of time because this soft landing they want is going to take longer to play out, instead of correcting the interest rates and skyrocketing everything up and just making sure that inflation stops being at 6-8%. And we can see a bigger quote that is more about why the market rallied and was a little bit happier with this. This is from Jerome Powell, saying inflation data received over the past 3 months shown a welcome reduction in the monthly pace of increases. And while recent developments are encouraging, we will need substantially more evidence to be confident that inflation is on a sustained downward path. So, but people are taking this as the point where it's a little bit of a pivot. So it's not a pivot because they're not cutting rates, but they're probably going to slow down on rate increases, not try and keep pushing up. We already saw it with their 0.25% here instead of something like they've been doing a 0.5% or 0.75. And now they're saying that there might be a sustained down path. So the Fed has started trying to shift over and say maybe that the worst is over and the worst is behind us. That could be the path that we're going down. And all of this just so happens to coincide with Michael Burry's single word tweet, and him being completely wrong and the market's rallying. Now, could he be right and over the next couple of months the markets fall down again? He could be absolutely right. I think he also said he had like a ridiculous amounts of shorts out, and that is terrible for him. If he has a lot of shorts out, he's losing a lot of money right now. But it's just funny to see that you don't want to go down this path that Michael Burry is down, where he got something insanely extraordinary right when everybody else was writing it off. And then because of that, he just thinks that he can never be wrong again. So if you ever get into a situation where you get something right, a ton of people are against you, but you got it right, and then it plays out and you were right, don't think that you can't be wrong or that you're just smarter than everybody else, because that will end up being your downfall after. But that's going to do it for this video. As always, don't forget to smash the like button and subscribe, and I'll see you guys in my next video.